take a look at the euro dollar for the August the 16th session. It's actually pretty clear trade for me at this particular time looking on the euro dollar. And we don't even really have to go all the way up to the different time frames. There's a lot of good support and resistance here on the 1 hour chart. And you can see that we have this really nice trend line that we've really broken in here just over during Asia. And we want to remember that we've had a pullback and we've had a double top up in here. And what I'd like to see, number one, is a buying opportunity to occur here on this top. If the euro is going to continue higher, again, we're going to look for a close on the 60-minute chart above this resistance point here, close above that on the 60-minute chart for a long. That's a very clear resistance point for the euro dollar. The next thing that we're going to watch for is, looks like right now we're going to form a swing low in here. And what I'm going to do at that point is draw a trend line to see if we're going to have a trend line here. And any kind of trend line that develops later, not this one right here, not the one that we've seen. Let me draw it right in here in the day that's already broken right up in here, this shorter one. Nothing in there. I'll delete that. But some trend line that is formed over here. And if that, whatever develops there, then I'd be looking for a sell with a close below that on the 60-minute chart as well. Not going to do too much with the 30-minute chart in the upcoming session. So if this forms a swing low, and if you're wondering what a swing low is, here's a swing low. And there's another reason we're going to talk about this for today. Is a swing low is a candle that has where it's lower here in the middle, as you can see here, and candle on either side of it is a swing low. So that's a swing low. This is considered a swing high, where you have a candle at a point here, and the candles on either side of it are lower. So this would be a swing high, and this would be a swing low. And the reason I want to take a few minutes to discuss this is because I've been getting a lot of emails about, yeah, I like the videos, they're very helpful, thank you, but where do I place stops? So we're only going to talk about the euro dollar tonight for looking at the video forecasts, but we're going to talk about where to put stops for a few minutes. So again, for the euro dollar, just as a reminder for the strategies that we're looking for is we're looking for some kind of swing low to develop. Swing low being something like this, a point again where there's a candle that has candles on either side of it that are higher. And so the one in the middle has the lowest point, that's a swing low. We're going to look for some kind of swing low to develop in here, and then we're going to draw some kind of a trend line that fits that wherever it may be out here in the future. And then we're going to look for a close below that trend line on the 60-minute chart for a sell. But we're also going to watch again here at this resistance point up here, a close above that on a 60-minute chart for a buy. Those are the two trades we're going to look on the euro dollar. So let's take a look at, for instance, the trade that we talked about the day before, or for yesterday and the day before that. So let's go to 2 days ago when we did the video, and we talked about this trade right here. That's why we've left our notes on it. And we were looking for any kind of close above this resistance point here on a 60-minute chart like we have here for a long, and that's what we did take. So when you get into that, where do you put your stop? Well, most of the time I put my stops behind swing lows, significant swing lows like this right here or this right here. In this particular case, whoops, where we broke across a resistance line like we did here, I would look to put my stop just on the other side of a trend line. So I'd be getting it on this candle, and I'd be dropping my stop down here 48 pips below this trend line. Now a lot of people go, 48 pip stop, what are you doing? That's crazy. I just use a 20 pip stop. Well, if you just use a 20 pip stop, it's part of the reason that you're most likely getting stopped out on a regular basis. You need to move your stop. Your stop is an insurance policy. Like you get up, you get in your car and you drive. You don't drive your car and ram it into a tree because you want to exercise your insurance policy. You have insurance on. That's insane. The same thing. You do not want your stop to be exercised. You don't want it to be hit. In that case, you need to take it out of the range of where price has been normally responding. And price has been really normally responding above this trend line. So the closest stop we could put that's out of the normal range of price movement for this trade 2 days ago was on the other side of this trend line, about 50 pips away. Not too bad. If you really wanted to say, look, I'm going to put it below a significant swing low, that would have been back here, and that would have been about 80 pips. In this particular case, it's not necessary because we had such a beautiful trend line, but if you wanted to do that, you could have. So let's take a look at the trade from yesterday, where we were looking for this trend line. We had some subtle MACD divergence. We were not looking for any buys yesterday. We were only looking for a sell. We got the close on the 60-minute chart with this candle below here, like we said, and then we're looking for a short. In that case, where am I going to put my stop? Just about 10 or 15 pips on the other side of this swing high. Again, it's a swing high, oops, because this candle here is higher than the two candles on either side of it. This one's lower and this one's lower, so it's a swing high. So on this particular trade, you got in on the close of this hourly candle, and your stop went up above this high, maybe 10 pips or so, 45, 46 pips, which is reasonable for a 1 hour chart. And then you think, look here, it dropped a total of about 90 pips. So, we told you to fund in that 25 to 40 pip range and then see and follow that up with a trailing stop. So maybe you got 60, 70 pips out of it. But as you can see here, why would we put our stop up here? Because that's out of the range of where price has been going. It was just above that range, no price spikes, no nothing. So we're going to discuss that a little bit more over the next couple weeks of where we would be looking to place our stops. But in general, in practice, when you have a trend line like a break above a resistance area like we did here, you can drop your stop to the other side of the trend line. But in most cases, we're going to be using swing highs like we have right here to place our stop behind. And there was also a trade we had over here. And when we got into this trade here on this trend line break, our stop would go back down here below the swing low because that was out of the range of normal price action. And again, to all those people out there that say, hey, I just get in and put my trade or my stop 20 pips behind my entry, you're always putting your stop right in the normal movement price of price action, and a lot of times you're getting stopped out. So learning how to place stops is a skill. You can learn it. It's an insurance policy. You want to have it for those times that the market just blows out, right? Exactly the same thing with auto insurance or home insurance. You have homeowners insurance, but you don't get gasoline in a match and just want to burn it down to get your insurance money. That's actually illegal, right? Not something most people want to do. Same thing with car insurance. You don't get car insurance because you want to go out and drive your car into a tree. That insurance is there for an emergency just in case. Your stop is an insurance policy. It's there as an emergency just in case the market has some kind of unordinary price action going against the indicators. And that'll happen from time to time. But as you develop the skill of placing stops, which we'll continue to go over for the next couple of weeks, you will continue to grow and develop that skill. And you might even transition from those people who get stopped out quite a bit to rarely getting stopped out. And you might also transition from one of those people who don't put stops in and have price run 100, 200 pips against you because you don't know where you put a stop in, to taking stops 30, 40 pips on a 60-minute chart and actually making a lot more money because you're taking smaller stop outs and getting some nice runs. So we look forward to working with you on that in the upcoming weeks. And that's going to be our video presentation for the upcoming October the 16th session.